Well, hey there, hi there, and
Hello
happy
there.
Friday to you. Today we will be presenting on the many stimulus packages that have come and are to come. And with me, I have Chris Basom. I went like this, but he's on the other side for me, and I don't know what he looks like for you. There's Chris Basom over there, and Kathy White on my right, or maybe my
Hello,
left. Who
everybody.
knows? Well, we're gonna be ripping through it real quick. Lots of information. It is tax season. If you didn't get the memo, so we're gonna try to keep it short and concise and right to the point. We'll see if we have some time at the end for questions. If not, you have our emails, you have our phone number. Reach out to us. It may take a little bit to get back to you, but we did get your message most likely. I guess no absolutes. I can't really say yes or no. But anyways, without further ado, let's get the party started. Okay, so maximizing stimulus money. You guys can see it? Doing a quick test? All right.
Yes.
So like we said, basically broke down between three different acts here. There's the CARES Act, which I didn't use the big long name. We'll use that soon. Then that was followed up by the Consolidated Appropriations Act. And now there's a brand new one that's still pending. Biden just started talking about it. So there'll be at least 10 revisions to it before it actually does anything. But this one's called, at the moment, American Rescue Plan Act. So I'm sure they'll come up with some fun acronym for that as well. But yeah, well, one thing to keep in mind for all of these is that these are all advances, and as such, none of them are one taxable income. So if you were worried about getting hit by this and this increasing your adjusted gross income and your taxable income and all that good stuff, nothing to worry about here. It's free money that's just as good as cash. And number two, if you shouldn't have gotten it, one of the things that I'm going to bring up in a minute, I believe there was $100 million that went out to dead people. So there's that. They're not asking for that money back. Yeah, out of the huge bill that we're about to talk about and the trillions of dollars that we spent, quite a bit of it went to the wrong place. But maybe
Trying to,
not that
trying
much.
to stay positive.
All
Trying to stay.
right. Positivity. That's what we're working on here. So if you received it and you shouldn't have qualified for it, you do not have to pay it back. If you got it, you do not have to pay taxes on it. So both two good points, and we're going to stay positive. So I'll be covering stimulus one, the CARES Act. Kathy will be covering the now I've got it abbreviated. The
Consolidated
Consolidated, thank goodness
Appropriations.
it's not mine. Consolidated Appropriations Act, which is very similar to the CARES Act. You'll see a lot of similarities between the two. And then the American Rescue Plan Act, that's still in process, has some similarities, but could be different too. We don't really know yet. But yeah, we'll cover more of that later, and that'll be taken care of by Chris. So let's hop into the stimulus one, our first stimulus that came through it, aka the Coronavirus Aid, Relief, and Economic Security Act. So actually, I think I win for the longest name, but most thought out acronym. You've probably heard this all over the news. From us, most likely, we were talking about it during last tax season because that's when it passed. Beginning of the year, kind of March 2020, when everything really started to hit the fan, so to speak. So with it, it was passed in March. We weren't 100% sure how it was going to be handled, accounted for, all that good stuff. It was a $2.2 trillion stimulus package and economic stimulus. It was the largest ever at its time. The reason why I say this is I have a strong feeling that Chris's third one is going to make this one look like small potatoes, but $2.2 trillion. Not all of it was to that stimulus package that we're going to be talking about today in the form of a one-time cash payment. About 300 billion of that went to that. But it also went to help with the PPP and unemployment and all those other things. This is a very big, all-encompassing act. All we're going to talk about today is your money that should have gone to you for being an individual in the I was going to say great state of America. It's not a great country. There we go. It's a country. Um, so, so yeah, the modified version, because it went through many revisions, ended up being about 300 pages. So not the biggest one out there, but a fair amount of information to cover. And like I said, we're just going to cover the money that you should have received by now. So it was based on either your 2018 or your 2019 return, depending on what had been filed. Now, we just said it passed in late March. If you were an early filer, if you normally are in and out by February, you would have already filed your 2019 return. They would have gone off of those numbers, because we're always filing a year behind. If you hadn't filed, if you had been like the millions of people that took advantage of the fact that then right after or right about the time that this passed, we also found out we had till July 15th to actually file taxes. Then a lot of people didn't file in time, so they based the numbers off of how you would qualify for this off of your 2018 return. So already, we're going to try to point out the pitfalls or issues that are going to come up with this. That was one of the biggest ones. If they're giving you money based on 2018, that's now 2 years ago at this point. A lot can change in that time. So sometimes it was strategic. Let's see if we can get the money under 2018's income over 2019, but that's kind of getting into the weeds, and we're going to cover more of that in a little bit. So first off, it was based off of your most or your previously filed return at that time. Now we're talking about last year, not this year. Okay, a little bit of time travel for you. And what was it? It was about $1,200 per adult and $500 per dependent child. So for my family, that's $1,200 for me, $1,200 for Allison, $500 for Blair, $500 for Declan. So we got about $3,400 for this stimulus. Big money, loving it, great stuff. Helped us stay at home, helped us do what we needed to do during all of this. We did get it direct deposited because they had had our direct deposit information previously. That was kind of another thing that happened with this. We ended up being able to file a it's an EIP, economic impact payment. That was the return that we were actually filing, pretty much zeroed out, had no information on it. People were able to file these electronically right away at the beginning of all this if they were planning on waiting till later to actually do their taxes so that they could get their stimulus money. So that was already in place pretty early on in 2020. The thresholds, like all things with taxes, you could make too much money and still get all of it. So the baselines are where they started at for a married filing joint. As long as you made under $150,000, you got the full amount as a married filing joint. If you're a head of household, you could make up to 112 and 500 and still be able to get the full stimulus. And as a single filer, 75,000. Now those started to income out, so to speak, as you made more money, but they were completely phased out by the time you made almost $200,000 as a married filing joint filer, 136.5 for head of household, and 99,000 for a single. So what does that mean? Depending on how much your taxable income was, or your adjusted gross income was, because those are two different things. Depending on what your adjusted gross income was, you either qualified for all of it, a little bit, or none of it. So if you're making $300,000 plus, I don't have a lot of hope for you getting any of this stimulus money at this time. But we are going to be talking about some other things that could be in play here. So I don't want you to just clock out now. Stick around. We're going to be talking about ways that you could also make some money off of this too. But yeah, those were the thresholds of how much your adjusted gross income needed to be able to get the money. So dependent, we talked about dependent child, you get $500 for them. So for that to be the case, this was under age 17 as of the end of last year. So we're talking this year, are we talking about 2020? So 17 at the end of 2020, or is it 2019? It's 17 on the last filed return, correct? Or am I just confusing everybody?
No, that's right. That's right.
Okay. So yes, your dependent child, to be able to get the $500, needed to be under 17 at the end of 2020.
Whatever your last filed return was.
Last filed return is so 2019. Okay, so if they were over 17, 17 or older, there is the new dependency credit that didn't exist pre 2018 as the other dependent. So there's also a $500 credit that would have showed up on the return too. Wait, so before we get into that, that's basically all the information for the first round. I think I missed I had a website on here. I put it in the wrong spot. There we go. So you guys will get the slides at the end of this. So if you have other questions about the stimulus, the first one that has gone through and is not dead and gone, but in the past it's completely paid out. If you were going to get the money, you got the money by now. Here's the website to go to be able to get that. But as we said, there's more than just the one stimulus. We've actually got 3 to talk about today. So without further ado, I am going to pass it over to Miss Kathy White.
All right. Thank you, Conrad. So I am actually speaking on the Consolidated Appropriations Act of 2021, also known as the Taxpayer Certainty and Disaster Tax Relief Act of 2020. So this act actually was signed at the end of December of 2020, and it contained 5,393 pages. But it's not all related to the pandemic and the relief and the recovery. So a lot of it had to do with budget and other things. So it has actually passed at $1.4 trillion in the budget, of which $900 billion went to the coronavirus relief. So let's take a peek at what this was all about. There we go. So similar to the first payment that we received, this economic impact payment was based on the income reported since it was actually in December of last year of 2020. Most taxpayers had already filed their tax returns for the 2019 calendar year. So that was, this second payment was based on your 2019 tax return. So how much was this payment? This payment was $600 per adult and $600 per dependent child. And it's interesting, Conrad had talked about that 17-year-old, you know, they're dependent children until they turn age 17. It doesn't matter if they turn 17 on January 1st during that calendar year or December 31st. Once they turn 17, they're no longer in tax code referred to as a child. There still could be your dependent potentially, because they're probably still living in your house and probably still going to school. But in tax law, they're no longer a child. So they did not necessarily qualify for the child credit. But we're going to talk about that a little bit more as to how creative we can be with those 17-year-olds and those college-age students. So this act was passed and signed in December of 2020, but a lot of us did not receive our stimulus money until January of 2021. And that's okay. It still is going to be part of the 2020 tax return that you're going to be filing. And even though it was received in 2021, like Conrad said, it's not taxable income, but we are going to reconcile it on your 2020 tax return. So a lot of our clients, when we're asking them this question, they're saying, well, I didn't get my money until January or February of 2021. It's like, it's okay. We're still going to go ahead and report it on your 2020 tax return, and it's not taxable. And the reason why we want to go ahead and report it is because you may be eligible for more money. And it's called the recovery rebate credit on the tax return. So the economic impact payment that we received in January of this year, based on the second stimulus payment, is based on the same adjusted gross income levels as what Conrad discussed earlier. And so if you are a married filing joint couple and you have $150,000 and less, you would have qualified for the full amount of the economic impact payment. And head of household and single, those numbers did not change between the two stimulus payments. And if you actually received more money and your adjusted gross income as a married filing joint couple actually hit 198,000 and above, you completely phased out of receiving any of that economic impact payment. So in between the 150 and the 198 as a married couple, you may have received a little bit of that payment. And I actually have an example to show you in the future here on how some of that may work. So it was actually considered an advance payment. This economic impact payment, they're calling an advance payment. And it's in advance of what the administration is now discussing and trying to pass. And that's what Chris will be talking about. So these $600 payments are actually going to affect what you may receive this calendar year. So if you did not qualify for the full economic impact payment, you can claim a credit on your 2020 federal tax return via the recovery rebate credit. So how much did you receive? Maybe you don't remember. So when we received our first payment, we received Form 1444, signed, I believe, by President at that time. And it told us how much it was. And with the second payment, we have this Form 1444B. And maybe you didn't receive this payment, or maybe you've already tossed it. So if you don't have this notice, you can go to the website. You can find out and confirm how much you did receive. Thing to keep in mind is do not call the IRS. They are not going to give you this information. You want to go to the irs.gov website, look at the coronavirus tax relief, and then the recovery rebate credit. And of course, this link will be on the slides that we will be providing with you. So it will help you confirm how much you did receive, but don't. And sometimes people received a debit card and maybe you lost it. So there's all kinds of information on the website, and we'll guide you through all of those steps. And so now we get to hear from Chris about the third one.
Woo woo. So I'm gonna, okay, so right now we're not looking at anyone's screen, right?
Mm-hmm.
Okay, so Kathy, I just want to follow up on the comments that both you and Conrad have made so far, that you may not have received the first payment based on a return you filed. You may have received the second payment. I had my first client like that yesterday, where his 2018 return was what they went off of for the first payment. Single guy, had cashed in some stock options in 2018. So his income was way above the limit. He got no $1,200 check. By the time the second one rolled around in December, we had filed his 2019 return. He had not cashed in any stock options. So in actual fact, he got the whole $600. When we just prepared his return yesterday, we showed he got the 600. We showed he got nothing in the first one. So he was able to pick up $1,200 in credit against tax this year, right? Which was fantastic. And that was an interesting, first example like that. I've seen a couple others where they had incomed out, phased out of some of it, but then this last year in 2020, income dipped. And because income dipped, they picked up the rest of it. So partial credits. So that's a very real thing, and it's happening for a lot of people. As I'm now sharing my screen, correct?
Yes.
Yay, okay, good. So it's all working. I'm going to talk about stimulus number 3. And stimulus number 3 has a really interesting name. It's the American Rescue Act of 2021. And Kathy touched on it, Conrad touched on it, but I really need to drive this point home. There were actually 6 different tax acts passed last year. 6 different things that the Congress, in their ultimate wisdom, thought that the American people should know and have. And so they passed these incredible acts of tax legislation that in some cases reversed things that they had passed 2 years before that. Like 2 years before that, Kathy, didn't they took away the disaster losses, that people that had big casualty losses, right, went away in the 2017 bill that took effect in 2018. Well, when they passed one of these many acts, last year, they said, oh, you know what? If you had a disaster, we're gonna give you that again. Okay, so all of a sudden it came back into the code. Some of the stuff in here had to do with pulling money out of your IRA or your 401k. I remember back in the Secures Act that they passed, they extended the minimum required minimum distributions, the RMDs from your IRAs, and they pushed those out a couple of years so people didn't have to take them quite so early. Well, then they turn around and they allow you to take out $100,000 and have no 10% penalty regardless of how old you are. So there are a lot of weird tax things in all of these bills, right along with the Paycheck Protection Act, which they passed, revised, and revised again. And then in late December, they passed a whole new PPP2 with a whole new set of restrictions and requirements in it. So this kind of stuff is just a constant fluid bunch of mess. And depending on when you did what you did, which act applies to what you did may be different. And your tax return didn't get easier, is what I'm trying to say. It got much more difficult before even this recovery rebate credit, but much more difficult in your benefit if we play our cards right. So with that, the American Rescue Act 2021 is currently being drafted and amended. You've probably heard on the news today, if you follow the news, that the House will likely, after a lot of negotiation this morning, probably vote on this either tonight or tomorrow and pass it over to the Senate. If it's tonight or tomorrow, the Senate will take it up Monday. We already know there's a provision in the bill that the House wants to pass that the Senate will not pass because the Senate has determined that it's against their rules to pass this one provision. So they will amend that out of the act. And if they pass the rest of the act without any changes, it'll go back to the House. Yeah, I know this is a little schoolhouse rock, as a bill becomes a law, but I just want to illustrate to you that this stuff does not happen overnight. Now, Conrad quoted the number of pages, but he quoted the pages in the bill that went and got passed. Kathy quoted pages, but those are the pages in the law after passed that the IRS is implementing. So I don't know what the pages, I don't know if that was in any of your research, Conrad, about the number of pages that 300 pages of bill became in the law that the IRS is enacting, but I got to imagine it's thousands.
Yeah.
They don't do anything without thousands of pages. Now, in this particular act, as currently being debated by the House, in the revision I read the last couple of days was dated the 18th. So that's last Thursday. Okay, that was not this past Thursday, 2 Thursdays ago. The bill had 592 pages in it. And if you think about how they have to do this, it wasn't just, okay, part of this is going to be rent assistance for low-income individuals, low-income taxpayers. But how are they going to implement that? Well, the bill has to kind of outline how they're going to implement that. So they're going to implement that by handing out vouchers. Then the question was, well, how long are the vouchers good for? If someone doesn't use the voucher in a certain period of time, what happens to it? If someone loses the voucher, what happens to it? If someone's dog eats the voucher, what happens to it? Okay, and all that stuff is in the bill. It's amazing the detail of these things, but the section that we're dealing with, and the section on all of these tax laws that we've been talking about, is just that section of direct payments. Okay, so keep that in mind. This is just a little piece of a great big piece of legislation, a lot of which deals with taxes. Now, as proposed, the advance payment for this one is going to be made in 2020 based on your most recently filed tax return, okay, which in most cases at this point is 2019. And in some cases, for people who ran quick hurry and filed their return already, is their 2020 return. And it's subject to reconciliation, just like we're doing with the last two acts in your 20 return, subject to reconciliation and potential additional payment to you in 2022 based on the filed return for 2021. There's a lot of gymnastics that goes on with all this stuff. So just kind of keep track of this one, even though it's being passed in the first quarter of 2021, likely, it's going to come back and get reconciled in 2022 on your 2021 return. And like the CARES Act, there will be people who this will actually be calculated on their 2019 return, not their 2020 return, and it'll reconcile their 2021 return. So these tax acts span a period of time. With this one, this is the big number here, and I beat the 1,200 in my act because it's 1,400 bucks, and I really beat the dependent one because that was 500 in the first act, 600 in the second act, it becomes 1,400 in the third act, and a married couple with 2 kids under 17 are potentially looking at 5,600 bucks. Does anyone on this call have 2 children under 17 and they're, oh, look, it's Conrad. Conrad got that. Okay. So actually, I believe that the tax gods are passing these bills to benefit Conrad.
It's true.
There are also other people being helped, but this is largely for the benefit of Conrad.
Thank you. Thank you, tax
so
gods.
as you're paying your taxes the next several years, just remember you contributed to Conrad's.
I appreciate it. I appreciate everybody.
Yeah, there we go. Income qualifications in the original bill could be the same or are the same. If you read through the wording of the original bill, they're the same as the last 2 acts. So that 75 to 150, phasing out by whatever, right? So all of those same numbers exist, but it could be significantly reduced. One of the negotiating points that the Senate has brought up is changing those income thresholds from 75 for an individual down to 50. And instead of phasing out at 99, phasing totally out at 74. Okay, so dropping at 25 grand basically. And the same would be true of your married or your head of household and you're married. Is all that could be changing based on what the Senate does to the bill. The dependent defined issue in the bill currently, all right, as being debated by the House right now, anyone you claimed as dependent counts for the 1,400 bucks. There is no age restriction, okay? And this is interesting because we have clients, and this could be you, who claim a parent, claim a someone who's not your child but lives in your household, okay, and qualifies as a dependent under the other rules that the IRS has for who is a dependent. Those people are now, everyone's now under that same umbrella in the currently debated bill, but negotiated could go back to the defined as anyone under 17. And that could be one of the restrictions. This is how they open and close the floodgates for the money that these things cost. Obviously, if you take the single individual from 75 to 50 or the married couple from 150 to 100, and then you start to phase out the benefits, you dramatically change the amount of people who qualify for that full payment. And that's what they're doing. They're trying to balance this money, okay? So with that in mind, I'm ready to toss everything back. And so I'm gonna change my presenter back to Conrad. Here we go.
Hey, hey.
Hi, hi.
Okay, stimulus round 2. Stimulus 1, round 2. And I realized after I put it that way, it doesn't make any sense because there was a round 2. It was the second one. And we're currently working on the third one. But anyways, we're gonna pretend like this is still just the first one. So like Chris and Kathy have been saying, it all depended. It always depends. That's always my favorite answer when anybody asks me anything. It depends. Many had not filed their 2019 return by the time the first stimulus had passed. So with that, the stimulus was based on 2018 return. A lot can change in a year. Normally we like to be positive and say every year we make a little bit more. So if it went off of 18, that could have been a benefit to you if you made more in 19. Chances are, statistically, 19 to 20 was a bad year for you. So when we're catching all of this up, this is its opportunity now to actually get some of that income. So am I not clicking on this one? There we go. So the CARES Act is already out, and I'm not getting to see my whole page here. Hold on, stick with me for a second. There we go. Okay, so the only way to get the money is based on what 2020 return looks like. So in the beginning, I already talked about the EIP returns, the economic impact payment returns, where you could just e-file a blank return so you could get your money. If you missed that window, if you then missed you've probably already filed 19 now. If you're now to the point where you can file 2020 and you can essentially collect all that money that was owed in the past. So here's the scenario that better explains it. So if 17-year-old was a dependent on a parent's 2018 or 2019 or a caregiver, not necessarily the parent, because sometimes this is, well, I guess I'm talking about a 17-year-old. I'm not talking about a 80, 90-year-old parent of the filer. But if you had this dependent and they were on your return because you were getting educational credits, or they were your dependent and you wanted to get the other dependent credit of $500, they didn't get any of that stimulus money. But if now they go out and they file their 2020 return as dependent of themselves, now they can get that $1,200 credit. And the benefit really here is that it's not just this one. Kathy is going to talk about how you can do the same with hers, and Chris is going to talk about how most likely this, if it doesn't get taken care of in this one, it'll get taken care of in 2021. But this money is still, even though it's come and gone, it is still available for you. And that's why when we were preparing for this webinar, we're kind of talking to each other and going, wow, this is going to cost even more than the proposed budget that they originally thought, because this is going to be over the course of years now. So we don't really know how much this is paid out, how much of it is gone to which areas. But yeah, this is yet another way that if you didn't file, we've got a lot of college age students who in the course of all this, they got sent home. They're not on campus anymore. They have a different college experience now. They most likely didn't get that stimulus. Well, they can now. Definitely for the first one, because that has already been written and nothing's pending on the CARES Act. So if you missed the stimulus only filing, I kind of mentioned this already, in 2020, be sure to file last year's 2020, because you can claim that recovery rebate credit as we're talking about. So two things that you definitely need to be paying attention to is how much you got paid, if you got paid. If you didn't, this is how we get it, through our rebate credit. If you did, you might have qualified for more, depending on so many other factors. So get on the irs.gov website, find out what you've received, go through your bank statements. We're going to need these amounts regardless when we file. So to Chris's point, everything got more complicated, and even the simplest returns now require that we know this information so that we could possibly get you some more money. So yeah, don't be surprised if you get asked for additional info from us. Okay. Oh, that's the end of my slide here. So then let's go back. So at least it's not a white. Here we go. And pop it back over to Kathy. There we go.
Woo.
Well, thank you, Conrad.
Mhm.
As you were speaking, I was reminded of, we do have some, has nothing to do with the current slide on the screen, but as an extra bonus of information, sometimes couples will share custody of their children and go back and forth. So maybe 1 year, one of the parents filed and claimed junior on their 2019 tax return, and now in 2020, the other parent will be claiming junior on their tax return. So actually, that dependent would have received and qualified for the $500, potentially, the $500 and the $600, the first two payments for stimulus one and for stimulus two. So then that junior will, the spouse who's going to be filing in 2020 with a dependent who was not there for them to claim in 2019 could receive an additional recovery rebate credit for 2020.
Walk through that, because that was, I followed you, but it was
Yep.
it was kind of tricky. So what you mean is, let's say you and Conrad have little junior, and little junior was claimed on Conrad's return in 2019.
Yes.
So during 2020, his income was looked at to see how much of that rebate credit he might have gotten based on himself at 12 and 5 or 6 and 6. Now the dependent jumps over in the 2020 filing to your return.
Yes.
And now your income and junior and what you didn't get last year that was already paid out to the other parent, okay, who did claim
Potentially, yes.
but now you're claiming the dependent. Now it's saying, oh, well, you should have gotten this for that dependent. You didn't get this. So now we're going to recover a rebate credit that to you.
Yes.
Wow. Wow.
That's
Okay,
definitely
sorry.
not intended.
And it's the same dependent would qualify for both tax returns.
Mm-hmm.
Or let's say somebody, you know, adopted somebody or had, you know, somebody was born in 2020. So you'll be picking up those additional credits.
Mhm.
But one of the things that really happened in 2020 versus 2019 is the number of taxpayers actually earned less money. But my particular example is my retired client actually was not required to take their required minimum distribution in 2020. And so by not taking that minimum distribution, their adjusted gross income actually dropped in 2020. So in 2019, because they had to take their required minimum distribution of $30,000 and their pension is $170,000, so their adjusted gross income was over the limit for a married filing joint couple. It was $200,694. So in 2020, they didn't take their required minimum distribution. They still lived quite nicely on their pension of $170,000. So their adjusted gross income is only $170,000. So dropping down, since they did not receive either of those economic impact payments based on their 2019 tax return, they are picking up not the full amount, but they are picking up $1,542 of the recovery rebate credit on their 2020 return. So not a bad day at the park, as they say. So
and on that, this is the funny part about this. When did that I don't have to take my RMD thing come into the law?
March. Wasn't that part of the CARES Act?
That was one of those other little provisions that was kind of buried in that whole thing where everyone was worried about that $1,200 payment and that $600 or the $500 dependent payment. It was actually the ability for this client to delay the taxation on $30,000, and by delaying that taxation, they picked up a 5% bonus, $1,500 cash money.
Cash money. Yeah.
Mm-hmm.
Yeah. So some of these things, you know, we were able to plan, and some of them we were surprised by. I know back in March when we were discovering the first payment that Conrad was talking about, we were like, well, let's see, your 18 tax return says you have this much money and your 19 says you have this much. So sometimes we hurried up and we filed, and sometimes we did not, to see if we could get some of that payment. And so I'm sure once we learn more about this pending legislation, we're going to either expedite or slow down some of the filings of some other taxpayers as well. I also just wanted to briefly discuss, because Conrad has already covered this, on a 17-year-old. And it's not just the 17-year-old, but sometimes our college age dependents are still being classified as our dependent on our tax returns. And so one of the planning tips may be to take those students off of the parents' tax returns so that we can maximize the overall household stimulus money and tax credits. And so with this one in 2019, this dependent was a dependent of another. And in actuality, this particular client, for head of household purposes, their income phased out. They didn't even get the $500 dependent credit in 2019 on the tax return. So why not shift them over, that particular dependent? He's a little bit older than 17, but make him single, files his own tax return, take him off of the parent's tax return, and then now all of a sudden they qualify for the full $1,800, the $1,200 with Conrad's, the economic impact payment number 1, the additional $600 of the economic impact payment number 2, so for a total of $1,800. So that is kind of a nice, nice little bonus for somebody who could actually use some more money to go to
What you got
college.
there? What you got there, Chris?
It looks like Chris is trying to show us something. What are
you
you
got
doing
there,
over
Chris?
there, Chris?
Oh, I'm having my cake and eating it too. Come on, that was good. That was awesome.
I think it needed a little bit more frosting.
Well, yeah, there's actually a Cliff Bar that I chopped up.
It's early.
We don't have cake in my house. But this is exactly one of those situations where that's possible with some forethought, with some planning, with some ideas, and some thinking about how we're doing this stuff. Stimulus 3 will work very much the same way. And this is part 2 of my Stimulus 3 discussion. Filing date confusion is going to reign on this one. And the reason we pushed to put this webinar out today was today is the beginning of the voting on this bill. And when the president signs this bill, that's the date of enactment, okay? And on the date of enactment, that's when the IRS pulls the list and says, okay, these are the people who are going to get this check, and they start processing payments. Now, you may not see your payment for a while, but they've already pulled the list. What we're trying to do is understand these things well enough to be on the list, if we should be, by the date that they sign this or not. So I would say on the outside, we got a week, or on the inside, we got a week, if everything moves very smoothly and quickly. On the outside, we probably got 2 weeks. But in this window, fortunes will be made or lost. And it's not dramatic, it's true. So with that, filing date is going to be important. And just like in the CARES Act, it's going to, that confusion is going to be repeated if we're not thinking about it. Remember, it's based on your last filed return. So whatever the AGI on that last filed return was, and whatever the negotiated window of phase out is going to determine what happens here. And this could require us to be patient and wait until April to file. This could mean that we all have to burn some midnight oil and stay up extra and get these things filed before the date of enactment, but better that we know than guess. With that in mind, we expect that the same reconciliation will occur next year on next year's return. So now walk through this one with me real quick. So here's the strategy. I know I pick up $500 in other dependent credit, regardless of what happens. So Junior doesn't file their own return. I claim it as dependent. I pick up the $500 credit. I'm not phased out of the $500 credit. So I get the $500 credit. I'm good. Junior won't get his $1,400 check, but if next year Junior files as independent and files their own return, then they get it in a reconciliation. So if I'm a gambler, okay, I get $1,900 because I can double dip this one. I can pick up my $500 other dependent credit on the return I'm about to file, and I can get Junior $1,400 next year for the family at the reconciliation, right? Yeah, exactly. And this is the idea that we're constantly talking about, which is family benefit. What's the benefit to the household of how we file these things? And the conversation comes up invariably all the time. Should I claim so-and-so as dependent? And the answer used to be really easy. The answer used to be, yeah, of course, why not? Because there are only certain things you get when you file and have someone as dependent, like their medical expenses. Only the person who claims the dependent can have the medical expenses. Only the person who claims the dependent can have the American Opportunity Credit. Now, if you're not going to get any medical expenses and you've already phased out of the American Opportunity Credit because your income is too high and it's not hard to get there, then in fact, all we're picking up is this $500. And I just sat with a couple last weekend, it was last Saturday, where the 20-year-old child at UCR, okay, had been filed as dependent in the past. We picked up the $500 credit. The educational credits were going, into the ether. No one got them because the income was too high. But we turned around and this year filed mom and dad joint, filed junior on his own dependent return or his own non-dependent return. So he was his own return. He picked up 1,200. He picked up 600. He picked up $1,000 of the refundable part of the AOC. So he got, what's that, 2,800 bucks just by how smart I am. I mean, I want to take full credit for this one, okay? Just because I stopped and thought about it for a second and was preparing for this webinar. So, you know, it was there. So there's 2,800 bucks. Now, when this new bill, stimulus number 3 passes, the what do we call it again? The American Savings
Rescue Plan
Act. Yeah, Act. Okay, so when they do that, he'll get another 1,400 bucks. They wouldn't have seen that anyway because again, their income is too high. So they would have gotten nothing on that one. So what's that? $4,200. Holy moly! I think we need to change our fee schedule, Kathy. I think we need to get commissions on the money we save people. But I know that's illegal. We can't do that.
That is not legal.
That is not legal. We cannot do that. Okay. So we won't do that. But just by thinking about it and just by planning it out, that's the benefit of taxes. And that's made this game really fun for us. A little bit nerve-wracking, a little bit scary, but really fun. So that 17 plus planning is needed. What are we going to do with that? And we want to maximize our dollars on purpose, not by accident. So with all that in mind, we believe everyone over 17 should file their own return as a blanket statement, and then we have to look at the situation. But we think this is probably, you know, in the absence of really taking any time of figuring it out, we think this is probably the answer. So with that, I think that, yep, that's it for me. I am going to stop sharing. Are we back to the?
Yep.
Yay, okay. So with that, I mean, that's really what we're presenting today. And I'll just toss back to you, Conrad.
Yeah, I think it can help regardless your situation. You know, I kind of said it at the beginning of, well, if you were, you know, over $200,000, then you incomed out of any of these benefits anyways. There's no reason to check out though, because do you have a college age student? Do you have a dependent on your return? Do you have education credits that you're not writing off anyways? There's so many factors to it now that make everything so much more complicated, and that's not a bad thing. You know, with I wish I had the quote off the top of my head. But it's something along the lines of, you know, with struggle, with what is it, comes opportunity. Anybody?
Every challenge, right?
With challenge comes opportunity. So yeah, just like at the beginning of this, just like a couple years back when we had the Tax Cuts and Jobs Act, and everything shifted too. It required you to be aware of what was happening, and it required you to get out of your comfort zone. But those that did, benefited from the change and set themselves up in a way to take advantage of the new code. The code, if anything, if I've learned anything since I've been in the tax world now, it's that change is constant. You know, I feel like it used to be the same thing for years. I remember saying that after the second year, and we had just gotten proposed a dramatic change, and I'm like, wait, I just figured this out. Like, I'm getting comfortable with what it is, but now it's something completely different. The only thing that's been consistent every year is change, is that there are multiple code revisions. Yes, Chris.
Well, so let me throw some just general FAQs, frequently asked questions. Do we think, and I'm going to ask our panelist Kathy, do we think they are going to extend the filing deadline again this year?
Well, I think it's interesting because they've already extended the filing for the entire state of Texas because of the disasters that have happened there. And then I did read something about other states that have been affected by weather, storms, and disasters, which is 48 states. So I am kind of thinking, you know, I don't think they're going to leave California and Florida still filing April 15th if they let all the other 48 states extend their filing date. So I'm leaning towards we'll probably have some extra time. That's my opinion.
And any idea of, is that going to be a July 15 again? Do you think it'll be shorter? Do you
Well,
think
they're giving Texas until June 15th, so they're extending 60 days. So I would assume that they would do the same for everybody else, but time will tell. And the other thing is if there are other stimulus payments that need to be issued between now and April 15th. So I would say if this bill does pass, the IRS resources will be focused on getting those payments out to taxpayers, and they cannot do all of this work
Multitask.
simultaneously while they're doing the filing of millions of tax returns. So that would be the other issue that potentially would push out the April 15th. But as everybody knows, we have until October 15th with a 6-month extension. So
already, yeah.
So that we can always take advantage of.
Yeah, well, I think the big thing that extending the filing date does is also extends the payment date.
Yes.
So when they do that, they push out 60, 90 days the need to come up with whatever money.
Yeah.
It's interesting because some of the other provisions in CARES Act and in the subsequent act and all the acts in between allowed people to, that 100,000 they pulled from their 401k, they could decide to pay it back. They could decide to pay tax on a third of it, pay it back a third of it, and then pay tax on a third of it over a 3-year window.
Yes.
And some of this, although there were forms in process before this, some of this is just now getting solidified. I mean, we were enjoined from e-filing until the 12th of February because the IRS was inundated with so many other jobs they had to do, and their staff down and their budget's been cut. So they pushed out for 3 weeks past their normal date the ability to file. So I think that could militate for a extension of the filing date. If they do this again, and let's say they pass this next week sometime, by the end of next week, they pass the third stimulus payment act, the IRS is the one charged with sending that money out. Right. So they got to pull people from all these different departments. They got to stick them in a room and say, okay, process the checks. And they start to do that,
Well, and we still have forms that have not been completed with the IRS for the 2020 filing, and we still don't have guidance on a number of new legislation as well. So there's still a lot of fluidity going on right now.
What's the piece of legislation that's going to exclude 10,000 something other dollars?
Unemployment, yes.
Right.
Unemployment may not be taxable, so that's something that's still pending. Yeah.
And they have the PPP2 that's going on right now. EIDL loans have been renewed. As I read through the 592 pages of this current bill, I was surprised to see all the little carve-outs for additional monies, like $300 billion for rent assistance. Okay, there's an increase in the child credit for when you file your return. They're talking about taking that credit up to $3,000 and making it a monthly payment that the IRS processes out to parents of children under the age of 7.
Yeah, that's interesting.
Yeah, I mean, there is a lot to this stuff, and there's also a new series of grants, small business grants, as well as PPP, and the grants are all managed on a state level. Didn't you have a client last year, Kathy, who got a Mission Viejo grant?
From the city, yeah.
From the city, not even the state. I mean, I've had clients apply for the state grant.
The state has some grants, yes, for small businesses.
For COVID stuff.
Oh yeah, and we didn't even talk about that. The California Newsom just signed the additional, what was it, just $600? But there's another stimulus package depending on if you can qualify. It's definitely for lower income, but that's even yet another stimulus that's out there or money that could be available for you. So yeah, if you are unemployed currently, it's a great time to get up on the web and do some research because there is money out there.
Right?
there's plenty of people looking to help out right now. Are you gonna say something,
Well,
Kathy?
and I was just reading something that said, what is it, like a third of the businesses are saying that they're not going to make it through March, that they're going to be closing. I think that's across the country, these small micro businesses. I mean, the statistic is huge.
Well, I heard a lot of that leading up to,
There's a big chunk of this bill that's aimed right at the restaurant industry.
Okay.
And that could be in relation to some of this other conversation. But it's interesting to see how, we always say this, the Congress shouldn't pass tax law without talking to a tax professional. And to Conrad's point earlier, when you talked about what the cost of this thing is really going to be when it's all said and done. I mean, some of this stuff we didn't see last April when we started looking at this and how this was going to work. And then as we started to really look at it and look at how it was going to get implemented and how it was going to get executed, there all of a sudden became new loopholes and new opportunities and new challenges. And I think that's constant. I mean, if we think this is the only tax bill or tax modification that we're going to see this year, we're crazy. They'll pass more between whatever this bill is and the end of the year. There will be more technical corrections acts. There's going to be, definitions of these other things that are going to come out. And all of this stuff is going to be constant. By the way, the Newsom thing we're going to cover in the newsletter coming up on Tuesday this week. So if you have unsubscribed to the newsletter, please resubscribe. Contact Michelle, find out how to get back on that. We talk about this stuff constantly, okay? And then when we talk with you, we figure you're up to date because we've been putting it out there. And so we figure you're following, okay? We need you to follow this stuff because it's massive and it's all over the place. I just got another email yesterday from a client who wanted to know how we were going to handle the fact that her company moved her to her office in the home last March. How are we going to write off that office in the home?
I'm getting that one every day. I've got increased expenses for moving home. What can I write off? And it's unfortunately a very easy answer. Nothing. If you are employed, zero. If you're self-employed, everything. So, that was yet another thing that if you were moving and shaking, if you're ready to adjust, if you were going to go to your employer and say, I don't want to be an employee anymore, you need to 1099 me, I need to be an independent contractor, I need to go somewhere else and do it that way. Unless you did that, all of those expenses that you've now incurred, although you've upgraded your home office, which is good, and was probably necessary, it's not deductible.
And it was funny because what we did in response to this is we went to the folks we moved home, and you're looking at everyone in their home office. We went to them and said, okay, how about this? How about if we pick up the cost of your internet as a reimbursement? How about if we pick up the cost of your home office as a reimbursement? And we generated on a company level deduction for that money, while at the same time, the employee getting a reimbursement is not taxed on that money.
Yeah, so the only way to write it off.
Yeah, massive potential benefit if you were thinking. And that was one of the webinars we did, late summer, we talked about this. So this is the stuff that we really need to plan through because it's just too voluminous for a quick answer, and there are too many issues not to be paying attention to it right now. So, I'm sorry, Conrad, we're running out of time here.
Yes, we are. We've got 1 minute left. We've got one question here that I'm thinking we can answer pretty quick. If my income is about the same as last year, should I wait to file? It depends.
Get us your paperwork. Get us your paperwork so we can review and find out on your specific situation.
Oh yeah, there's no need to wait. Find out where you're at right now, and once we figure that out, then we can make the decision whether we need to run, hurry, get it done, or give it more time.
Well, because the other factors in there are the dependents you had, the filing status you used, all that kind of stuff. So
there are no simple questions because every question really has five or six questions attached to it.
Yeah, so, absolutely.
But yeah, no. Well, that it is lunchtime, so I don't want to. I know we don't want to miss a meal here, so I want
I
to
have
make sure that
enjoyed my
everybody.
cake. I
Oh,
have
you're
You're
still
eating your
eating that
cake.
cake.
eaten most
Yeah.
of my cake, yeah.
Enjoy that cake. But yeah, if you do have any additional questions, you have our emails. You got this. You'll get a recording of the webinar. You'll also get the slides. As things come up, don't hesitate to reach out. We're here and we're here to help, and we do this 24/7. So we don't disappear after tax season. We've been doing continuing education since forever. So as we're learning new things, because they're still deciding on how to do all this, uh, we will share it with you. The easiest way to get the information is through our newsletters. It's through our webinars. If you're not on that, get back on it. That's the easiest way for us to tell everybody what's going on. But in the meantime, if I don't see, I wanted to use Truman. If I don't see you later today, then good evening, goodbye, and good night. Totally butchered it. Anyways, okay.
Thank
Thanks
you.
for joining us. We'll be back soon. All right. Have a good day.
Have a good day.
Thanks.